This is Don DeBartolo, a senior commodity broker and market strategist with StoneX in Chicago. I'm also the trader behind the Trade Spotlight advisory service. My advisory service is one advisory, but broken up into three segments. I'm covering futures, commodity options, and future spreads. This is Beyond the Spotlight, a video that spotlights two or three markets that may become trading opportunities for this week. This week begins Monday, May 16th, 2022. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. I have two charts I want to review for today. Obviously we're in a period of volatility. Not a lot of markets are trending. It's been very choppy. So I actually didn't have a trade in the last couple weeks as I've been waiting patiently for a trending market following our chart formations and using our technical indicators to cancel out that noise. Here are a couple markets that I believe are setting up to trend. The first being the July 22 soybean oil contract. And I've got a chart up of today's trading session included. I have a long trend line drawn off. The low starting with 67.52 from April 1st of this year. We had this big rally to create the new 12-month contract high at 87.65. Within a month, that session high was made on April 29th. And then we had a little bit of a pullback recently, and then a bounce off that 20-day moving average that comes in at 81.72. So I'm using the recent highs. You can see that red horizontal line as my stop loss. I want to make sure the market doesn't go above that level. And then I want to look to short the contract on a break of that 20-day moving average and that lower trend line. Right now the trend is relatively flat, but my momentum indicators are showing a potentially overbought market. So I want to see those roll over. The second one there is the MACD, and the third one there is that GBE turning point indicator. So looking for those to hook down. And then I'm going to set up a trade to sell the contract to the downside. Again, the stop above recent highs using today's high is perfectly fine at 84.64. If you're comfortable taking on more risk, you could go above that 12-month contract high at 87.65. And then the downside target, there's a couple there. The first one being those recent highs in the beginning of March, 75.15 is the highest high. Or if you went down to those recent lows and that number one point on this trend line there at 67.52. So watching this for a close below that trend line and then setting up a sell order for the July soybean oil. And the second chart I want to take a look at is sugar. So just a couple physical commodities that we're looking at here for this week. So sugar, what I have drawn off here is in head and shoulders formation. That first ellipse, picture that as the left shoulder. The second ellipse, the taller one, that one is encompassing the high of 24.46 from the April 13th high. That's the head of the formation. And then as of today's trading session, this is potentially putting in the right shoulder. We are going to want some additional data points here. We're going to want to see the market chop around a little bit in here to really firm up that right shoulder, and then we'll look for a trade to the downside. Typically you wait for a break of that neckline, which here is relatively flat. But what I'll do is wait till we form a strong right shoulder and then sell on a break of a low. You can see the trend is still up in this market. The momentum is up. The GB turning point indicator is up, and that's fine. I want to see the market chop around a little bit within the 1950, maybe the around 1950 range, kind of chop around there, and then look to roll over. And I want to see my moving averages roll over as well. We did see a 20-day moving average cross a 50-day moving average. That's a bearish signal, but of course with all the volatility we're experiencing, you can see the rally that we had. The gap opened today. So I am expecting some volatility here in the next couple of days, and that's going to firm up this formation to the downside. This is an example of the Trade Spotlight. It's an email service, so directly into your inbox. I've got the write-up of the trade, any important information like margin. I've got the precise entry order, the risk reward, the risk of loss or the potential profit on each trade, and you're very welcome to adjust these to fit your own trading style. Then a chart you can click open to review more. If you're not following the Trade Spotlight Advisory Service, I encourage you to do so. It's a free service. Let's go to the Daniels Trading webpage, click on Advisories at the top. Under Technical Analysis, you'll find Trade Spotlight where you can read more, view recent posts, and click the orange button to subscribe. Here is all of my contact information if you have any questions about the two charts I discussed today or the markets in general. At very volatile times, we want to pick our spots. Thank you for taking the time to watch and listen, and happy trading.